Hi there, I'm Dean Heskin. You're tuned into our podcast, The Secret War on Cash, brought to you by Swiss America. I'm the president and CEO of Swiss America, and I have with me my co-host, Chris Agelastos. Chris, good morning. How are you today?
Good morning. Doing well, thank you.
I'm sure you've been plenty busy because the gold prices in the market have been just absolutely erupting. 2020, it's funny, at the end of every year, like anything, you wonder, okay, what do we have on the horizon in this upcoming year? Is the market going to do as well? Is it going to be flat? Is it maybe going to go down? And there was certainly a lot of predictions that gold was going to do well, but I can tell you myself, like, I am surprised at how well it's done, especially in so much as the new administration, the Trump administration being in. You figure that to be, which we're all, positive or optimistic about that, but you'd figure that to be kind of like the great stabilizer or equalizer out there. And it just speaks to the fact that there's no matter who's in office, there's still a lot of uncertainty, and it all doesn't go away. So let's get right into it here. Look at our first article we're going to cover: why a Chinese gold mania may be starting. And that's what's kind of interesting. They're talking about why it may be starting. And this is in light of the fact that gold has already been on a tear. And now they're saying a Chinese gold mania may be starting. And Chinese represent quite a bit of buying strength out there in the marketplace. But it does talk about how they were very aggressively accumulating, metals over the course of last year. And in the midst of some of the concerns out there, et cetera. And, we kind of talked about this in our podcast over the course of the last year, where, as I read this, Chris, I'm kind of like, this is what the United States of America should have been doing last year. I mean, why were we sitting on the sidelines when other countries out there, were forming the alliance with BRICS because of gold backing? You had Chinese who were very aggressively buying gold, and yet we weren't doing much of any of that. So, what are the Chinese up to here? Why are they doubling down? Let's call it.
Yeah, well, this is certainly a situation where hindsight's 2020, right? What they're looking at here is the big run up we saw about $400 an ounce last spring, which equated to a 23% run in a very short amount of time, and I think it was over the course of like 6 weeks or something like that, and that was all a big push from Chinese futures traders. And we didn't know that at the time, but now, obviously, looking back, we know. And so they ran up the price about $400 and then backed off. And it's been relatively quiet since then. But the gold price has continued to grow and really stabilize, kind of consolidate a bit. So there's more stability in it. And now, in the last couple of weeks here, these Chinese traders are increasing their trading quite a bit. A noticeable jump in their trading activity, and so they're using this to predict, hey, we saw what happened when they did this last year. We're now expecting the same thing this year, and they're also, in China, a lot of people may not be aware, they're having quite a real estate crisis there right now. Their stock market has been very volatile, and people are looking for areas that they can trust. And gold, as you and I have talked about many times, has always been considered a safe haven. So China is expected to impart a lot of stimulus into their economy, which is going to push inflation even higher, and that's good for gold as well. So you've got all of these Chinese buyers saying, where can I put my money that's safe, that also has good growth? And the answer for that right now is gold.
Yeah, it's unbelievable. I mean, a message that for over 42 years, Swiss America, we've been advocating, promoting, preaching, whatever you want to call it, being diversified and in my entire career, I own Swiss America now. Let's see, I've been here, I should say, for a little over 32 years now. Yeah. And there's always been this, when you look at, a lot of people that looked at this kind of a combative relationship between like stocks and gold. Like stocks are good, gold is bad, or gold is good, stocks are bad. It's not that. It's a means or a way by which to become diversified, get physical gold just in case. But
Mhm.
the point is, if for the first time that I've seen in my career, the investment world, they would always talk about gold, how it just sit there. It would just sit there. It didn't do anything, or maybe it didn't perform in years that it was not, performing like it is now. And even the investment world they're not really, when they're talking about this play in gold, they're not concerned per se about how much it's going to grow or what kind of appreciation they're going to get. They are looking at it as just being that hedge, that's something to, that safe haven, that place to be in case things go south out there. So, getting into the second article I want to look at today, the title here: Gold could hit $3,000 soon, and 4,000 in 2026. This Market Pro says. Here's why, and I'll let you run with this ball, Chris. I mean,
Mhm.
it's a matter of just kind of hitting on the high points here, but what I like about this, and for those tuning in, this is something I would say is definitely, if you're investing or looking to invest, worth a read, because it kind of gives you a pretty good layout as to why get into gold and what you can expect to see out of it. So what do we got here, Chris?
Yeah, well, they're not kidding. I mean, we've been talking about $3,000 gold happening in 2025. I just didn't expect it to happen in the first couple of months. We're about
Right.
6 weeks or so in, and we're knocking on the door. It could happen as soon as this week or even next. So, and up to 4,000 by the end of the year, which again wouldn't be that big of a percentage jump compared to what we've seen the last year or two anyway. So, but the big highlights here: inflation, obviously tariffs, things we've been talking about. Countries accumulating gold for their central banks, to kind of protect themselves against U.S. sanctions, to diversify themselves away from the dollar, which was a safe haven for a lot of countries over the last 30 years. And now inflation is continuing to rise. Here in the U.S., we were around a 3.3 expected inflation rate, and we've just shot up to 4.3% just in the last month here. So that in turn means that the Fed probably isn't going to be cutting rates again anytime soon, because that number is shooting up there. So all of these things are a good push for gold. And then on top of that, the S&P 500, most of the analysts out there expect it to be a bit choppy, as they say in this article, at least through the middle of this year, before it has the potential to climb more. So again, it's just all signs right now pointing towards safety and security with gold, better diversification, and on top of that, which is nice, a good growth of your money. We used to always talk about gold as just being a safe haven. Don't expect it to grow a lot. It's kind of consistent and boring, and that's really in the bad times. But in the good times like this, you can also make a lot of money. I mean, it wasn't that long ago I was buying gold for $1,400 or $1,600 an ounce, and now it's double that.
Right.
So it's really been great in so many different avenues.
Yeah, and that when you lay out all these factors, those are present factors. Those are factors that are not going to go away as to what's causing it to grow. And so it's a market, anything can happen, but there is a very reasonable expectation that this trend that we're on is going to continue. And it's funny, we talk from about $3,000 an ounce for gold in this headline as well. By 2026, they're talking $4,000 an ounce for gold, and there have
Yeah.
been some that have even been more aggressive than that. And it's becoming more and more believable by the day. And as we've talked about, and you just laid out for us, it's not just because banks are buying gold. It's not just because the BRICS alliance has been buying gold. It's not just because of inflation. There are so many factors that are kind of contributing to this. And at the end of the day, what they all are screaming at us is that there is a need for stability, because there is a lot of uncertainty and a lot of fragility in our economy. So if people want to learn more about gold, or they want to figure out how they might be able to position some in their investment portfolio or their retirement, what do they need to do, Chris?
Give us a call or a text at 1-800-289-2646. Request our investment packet. especially if you're new to this. We want to get you some materials so that you can kind of build a foundation. And then we also have people here that will counsel with you and help you figure out, is this a fit for you, exactly how it works, so that if it is a good thing, which I think, for most people it is these days, at least you can step into it comfortably. You can also visit the website at www.swissamerica.com. We have different reports you can request there. You can even chat with one of our representatives live, get some basic questions answered, or have some information emailed or mailed out to you. So a bunch of ways to reach out to us. The bottom line is just take a proactive step and call or visit the site, and let's get the ball rolling, and then we can kind of go from there.
Well, fantastic. Thank you for sharing that, Chris. For those of you tuning in, thank you for doing so. I hope you enjoyed the program, and we look forward to talking with you more in the future. If you're not subscribed to this podcast, please do so, as we'd love to stay in touch and stay in communication with you. Chris, thank you. Have a great rest of your day. And for those of you tuning in, please do the same.
Thanks a lot.